This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this market and economic update. In this video, we'll discuss three major reasons investors can be thankful this holiday season. Although 2024 has seen periods of uncertainty, inflation is moderating, the Fed has begun cutting rates, and the markets have generated strong returns. While there are still things to be concerned about, such as market valuations, the national debt, and geopolitical risks, this is a good time to pause and reflect on the many positive factors in the market and economy right now, and to stay focused on the long term with a well-balanced, truly diversified portfolio. Over the next few minutes, we'll cover three important reasons investors can be thankful. First, stocks have had an impressive run this year, with tech and AI leading the pack. Though many other sectors have also seen double-digit positive returns, this is the case despite periods of concern from geopolitical tensions, a presidential election, and broader concerns about the trajectory of the economy. As this chart shows, other than the third quarter last year, the market has experienced robust and steady growth over the last 2 years, thanks to strong corporate earnings and growing confidence in the economy. However, the strong market growth has resulted in less attractive valuations, with the price-to-earnings ratio of the S&P 500 now at 22.3. This is a reminder of the importance of holding a truly diversified portfolio, one that incorporates diversification of not just asset classes, but also of approaches and disciplines. We call this multidimensional asset allocation. Now, the end of the year is a great time to review your portfolio allocations. And remember, as an old saying goes, diversification means always having to say you're sorry. Namely, everything in your portfolio should not be up at the same percentages. As I've always said, if everything goes up at the same time, it usually means it all can go down at the same time. Next, this chart shows the Consumer Price Index, a commonly cited measure of inflation. CPI tracks the prices of specific goods and services to track general price changes for consumers. It shows that inflation, or the rate at which prices are increasing, has slowed to more normal levels. This is good news, since it all allows the Fed to reduce interest rates, which they have done twice now. However, it's important to note that falling inflation is not the same thing as falling prices. It's likely that the prices of everyday necessities will remain high. While investors have been concerned about the exact timing and pace of Fed rate cuts, what matters more is the overall trajectory. Lower inflation and interest rates helps individual consumers and businesses and can help support the economy and market. Finally, this chart shows job creation re-indexed to zero in the year 2000. Many feared that the Fed would cause a hard landing when it raised interest rates, since doing so tends to have a dampening effect on job creation. However, hiring has remained remarkably resilient over the past few years, with new jobs more than making up for losses during the pandemic. While recent reports have not been quite as strong, unemployment is still low at just 4.1%. Meanwhile, the U.S. economy continues to grow, with consumer spending providing a big boost. While it's impossible to fully predict or avoid inevitable market volatility, investors should look at the many positives we have near the end of 2024. And this is a good reminder of one of our key philosophies around investing. That is, preparing for the future over attempting to predict the future usually leads to better and more enjoyable outcomes. There's much to be thankful for. Now, we hope you found these high-level insights helpful. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, feel free to download our eye-opening white paper titled Busting 7 Risk and Return Myths. You can click on the link below or visit our website at dynamicwg.com or emailing us at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care, everyone, and make smart, logical, and fact-based financial decisions.